Good morning, everyone. I'm your host, Ryan Razbiani. Welcome to Market Simplified on the Place Your Trades Network. We're the network that focuses on trading daily options using the CME Group's event contracts to trade indexes, metals, energies, and even Bitcoin futures markets. Today's broadcast is brought to you by Tradeovate, which has built the custom app dedicated to trading event contracts, which is what we use here at Place Your Trades. Welcome to a brand new episode. Really happy to have you guys here with me today. We've got a lot of fun stuff to talk about. Yesterday, we got our hands on the CPI data, which I want to discuss with you. I want to jump into discussing some event contracts with you as well, to go over some ES, because that's what I use. And then we're going to end the show with, of course, with the actual event contract situations. So we'll do some market overview. We'll talk about some price action happening today and some stocks that are going very, very wild. And we'll discuss at the end the event contract. So first, I want to start you guys off with what happened yesterday with our CPI data. So the CPI data came out yesterday. And I want to just, let me just bring the screen online for you guys. So you can see the CPI data came out yesterday, and it came out to be much, much better than what I was expecting and what a lot of people were expecting it to be. And even the analysts, the big analysts, came in even better. Year over year CPI was estimated to come in at 3.1. Last time it was at 4%. It was down to 3% this time. Nice big drop. This was a huge drop and a huge sigh of relief for the markets, because everyone was like, what is going on? When are we going to get the big drops in inflation data? And this was one of the first big drops that happened. We also saw month over month estimated was to go up by 0.3%, went up by 0.2%. Now last month it went up by 0.1. So this wasn't fantastic, but the markets didn't really react or care for this too much, because the headline number that year over year went down. Now the most important part, we discussed this in our last stream last week, I think, as well, or the last time we talked about Jerome Powell. I feel like we talk about him all the time now. He came out and said that, hey, I'm focusing on core CPI data. That's the most important one for PCE, rather. But he also looks at CPI. He hints and he slips from time to time and says, hey, we look at CPI as well. That came down as well. That came down to 4.8%. Estimate was 5.0%. That was down from 5.3. So we went from 5.3 to 4.8. That's a nice big drop there for our core CPI year over year numbers. Came in better than estimated. This is very good news. And mind you, we haven't even seen the drops in the housing market yet. That has a 12-month lag. So if that kicks in, that'll be good. Now, mind you, in the summer, things do get a little bit hot again due to energy pricing jumping up. But this is going to be good, because we'll get the headwinds from energy, but we'll get the tailwinds thanks to the housing market. So we could see this actually go even lower, hopefully, in the coming months. We'll have to analyze it month by month as the data comes out. And last but certainly not least, core month over month was estimated to come in at 0.3, came in at 0.2. Very, very good. I think that was down from 0.4. I don't remember that one off the top of my head, but that's not important. I wanted to quickly show you guys a graph, because I love graphs. If you guys follow me on Twitter, you can see that I post graphs all the time and data all the time, because I just love that stuff so much. Let me zoom in a little bit more. So you can see here that it's kind of an overview of CPI and core CPI to see where we're going. Headline CPI has been coming down very, very well. It's been on a nosedive. It's been dropping down, and we've even been down to 2021 levels for this one, which I'm very, very happy about, because I'm loving to see it. We haven't really seen it in the stores yet. I think we'll get to that eventually down the pike. But core has been kind of inching down. It's been the one that's coming down slowly. It's been the one that's been the bigger pain point for the Fed and for the overall markets. Is, hey, why isn't core coming down? And we saw the big drop happen for the first time in a long time on this print. And I think this is why you're hearing a lot of talks about another 25 basis point rate hike in July. And that's the main point of discussion here, is because that we have the July meeting, and then we're not going to have anything. They go on recess until September, and that's the end of September. So that's July, August, September. Technically 3 months of no word from the Fed in terms of an FOMC. So I think they're worried that, hey, if we don't stick another rate hike in there and something happens over the summer and we have to do an emergency meeting, the markets will freak out. So they're probably thinking, hey, we'll do a 25 BPS hikes, really only incur a 2 to 5 days of red, and then markets kind of reverse back up after they've truly priced at it. So that's the big reason here. It's that core CPI, it's that core PCE number. And the biggest thing, last but not least, and you probably saw this in your newsletter. If you haven't signed up, make sure to go to Place Your Trades, sign up for that newsletter that comes out every morning with updates. It's a fantastic tool, especially if you want to get ready for in the morning for markets and everything. Make sure to go on Place Your Trades and sign up for that newsletter. It's really, really good information. You probably saw this in there as well. A little sneak peek. You probably saw this, but as you can see here, I broke down the itemized stuff here. For year over year, everything went down except fuel, which went down. It's negative numbers. It's kind of the funny part there. It went down by a ton, but didn't go down as much as last time. So everything was really good year over year. Month over month, everything was good as well, except the energy sector, which if you saw my video, you probably were already prepared for this, that the energy sector is going to be hot, and that's what it was. And new vehicles, slightly hot. The vehicle sector is going to be tricky. Vehicles are always a little bit tricky this time of the year as well. So we want to kind of keep that in mind. But used vehicles took a massive drop, which we discussed in that video that I did. Big drop there. New vehicles should find and stabilize itself. I'm not too worried about it. The thing that I'm worried about more is food. Food has been holding headstrong here. It did come in lower, but it's still holding headstrong there. Food is what I'm worried about, and energy. So it's no longer the core stuff. Core stuff is probably going to start getting better, but it's the regular headline CPI stuff that I'm really going to be paying attention to there. Last but certainly not least, I know I said that for this one, but I wanted to kind of tell you about PPI that came out this morning and why PPI is important. It's our producer price index. It gives us a look into what could be happening for the next CPI. And as you guys can see here, that kind of came in much better than expected. It was forecasted to go up for month over month for core, came in flat. That's actually good. PPI isn't something that moves very drastically, so I'm very happy to see this here. Core PPI year over year came down, even better than forecasted. So I'm very happy to see that. That gives me a good sign that, hey, maybe for core next time for CPI, we could see even a further drop, maybe down to 4.6, 4.5. Again, I'll look at the raw data and update you guys as we get closer to that. But it's a good sign to kind of keep in mind with PPI. And of course, with month over month, we actually made a typo here. We didn't go down for month over month for all four. For this one, it actually went up from negative 0.4 to 0.1, but still came in better than forecasted. Again, that month over month headline one is kind of the one that people tend to ignore, which is interesting, but that's kind of what you want to keep in mind there. Year over year, though, came down from 0.9 to 0.1. Big drastic drop. So that's what's going on there in terms of the macro market events that are happening. I don't think that there's anything happening tomorrow as far as I can remember off the top of my head. Let me just double check for you guys really quickly. I don't want to say the wrong thing and then you guys put in some long-term trades. So we do have actually some import-export price data, as well as some Michigan inflation expectation, consumer sentiment, current conditions, and inflation expectations. That tends to have an effect of a 1 to 3 minute effect on the S&P, so it's not too crazy. Export-import data, unless it's too drastic, doesn't have much of an effect. So we're kind of out of the woods, and we are starting some of our Q2 earnings this week. We had Delta and Pepsi report this morning, and then Friday, tomorrow morning, before the market opened, we got JP Morgan, United Health Group, Citigroup, Wells Fargo, Ericsson, State Street, and BlackRock. So the big banks are starting to begin their reporting, and next week we'll have more banks reporting as well. You're going to probably see the effects of those on the markets because it's going to be a big deal to see how banks are doing after the SVB situation going down in Q2. So let's look at some price action that's happening today. Obviously you guys know me. I'm a Tesla sucker. I love Tesla. So I always like to look at the price action on Tesla. Let me turn some of these drawing lines off. So we can kind of clean the screen, indicators off, and let's go to a 15-minute chart so we can kind of have some candles because it's still early in the morning. Tesla gapped up, and it's kind of beginning to slowly kind of close the gap here. It didn't close too much, but it kind of went up and kind of gave up a lot of its gains. Bounced again one more time. Let's just turn the drawings back on. I can't do it. I'm sorry. I can't do it without the lines. I need my lines. Began to bounce back up, and I need my indicators. Look, I tried, guys. I tried to do a naked chart. I can't. I need my indicators. The 20 MA kind of held us there, and now it's kind of been battling VWAP, and it can't get over VWAP here. If it can get over VWAP, we can probably go to 275 again, 277, and then 280. 280 is the big pain point for Tesla right now. It needs to get over 280 if we want to get to the next leg up there. It's this 280 has been the pain point here, and then 284.25. Those are the big two levels to the upside, but right now we can see we've got a battle at 275, 277 range there. That needs to break out for Tesla to go up. But a little guy here, one of my favorite companies. I'm not invested in it, but I used to be. But I had a lot of discussion with my team about this one when it was coming down to the Apple event. I said, hey, look, Meta messed up. They didn't buy up Unity, and there's no rumors of a purchase. But I'm happy that Apple and Unity have teamed up, and Unity has been seeing the dividends essentially of it on their price action. Big, massive pop today on Unity. Riding that VWAP, broke out, clean breakout here right off of. Let's actually put the line in. So right there, you can see we have a nice little breakout happening right there off the 15-minute. Ran up. It's kind of battling that 78 area. I took this trade actually this morning myself off of the bot. It alerted it to me. I took it. I went to 47. Didn't expect it to keep going higher, but it did. I'm happy with the trade, but this price action has been beautiful for Unity, and the breakout has been even better. So it's been really cool to see that. Apple has not been so kind since it reached this $3 trillion market cap range. Stayed above there for a bit, but it's kind of been having trouble getting over that 192 range. It gets there, it gets close within it, and kind of starts rejecting it. I feel like because again, what happened was the markets will front run that 3 trillion, and they'll push Apple to 3 trillion. They held it there much longer than I was expecting them to. They held Apple there, but they weren't able to sustain and be like, all right, we're going to hold 3 trillion for 1 week, 2 weeks, 3 weeks. It's a hard level to hold it at, especially when the overall markets aren't exactly there to that level. Apple really front ran the S&P, went really far. It's kind of been cool. It kind of cooled off, and I don't mind it. Look, it's still like doing great. Like, look at this thing on the daily chart. This thing has been a massive ripper. Just in the beginning of this year, Apple was sitting at 124, 125 at the low end, and we're now at 190. So it's essentially 190 exactly right here. You can see the number. It's a massive move that we got there right off the bat. So let's actually do, what is that? 190 divided by 125. That's a 52% move. So if you took investments here, that's why dollar cost averaging is king, not financial advice, but it's kind of what a lot of the scholars and a lot of people in the world of investing say. It's dollar cost averaging, especially in the pain points in companies that are cash heavy, have good cash flow. You can see the returns on those here, and you can see your Apple formed the wedge, broke down, and it's kind of trying to fight this. So let me actually extend this line here. You can see here that Apple has kind of been battling this situation right here across the wedge. If you extended the wedge that we had here, it's kind of, this support line is acting as resistance. The original resistance line, this top yellow line, is still in play, and it's still becoming a bit of a pain point for Apple here. Last, but definitely, certainly not least, we have to look at NVIDIA, right? NVIDIA has been a mamma jamma. She's been moving, she's been shaking, she's been grooving, and it's made another high. It's made another all-time high on NVIDIA today. You can see here that NVIDIA put in another all-time high at 450, essentially 449.91, but we're going to round up here for verbal purposes. It's much less of a mouthful to say 450. So at 450, we're kind of testing that big gap up. A lot of discussions with the ARM IPO. They were trying to acquire ARM. They didn't, unfortunately. I wish they would have been able to do that, but that got stopped. They're talking a lot about investments in that ARM IPO that a lot of people are watching very closely. So that's kind of what's pushing NVIDIA. I'm just double checking right now in the background to see if there's any other news that could be kind of pushing NVIDIA upwards that I might have missed. Nothing that I can see here, but that's kind of, again, everyone was expecting this thing to fizzle out, come back down, fill the gap. Myself as well, I was kind of watching this one close. I was hoping that we can get a gap fill. But this is the thing that I've been telling myself in the back of my head. Q2 earnings, estimated revenues 11 billion. If we can hit and beat that, it'll be good. Q3's estimate is where the bar is set. If they don't have anywhere close to Q2, and they're probably lower, and mathematically they should be, because how often are people buying these GPUs and rebuying these GPUs, rather not buying, rebuying these GPUs? That's probably when you might see a cool down period for NVIDIA. And this is where I'd be a buyer. Within this gap is where I'm probably going to be buying again. I've been selling shares into this rally, but I'll be looking to buy shares back in NVIDIA. So all of this discussion comes down to what? ES1. So before we do that, I want to talk to you guys about event contracts. You can go to tradeovate.com, sign up, and play with us these event contracts. As I told you guys earlier in the beginning about Tradeovate. Let me just quickly, I thought I was logged in, but I'm not logged in, so let's log in again. It's very quickly, it's a fun process of actually signing up. They ask you a few questions, you fill up all the information, you get in what you need, and then once everything is set up, you'll get your second step verification, which always set up second step verification, folks. It is a very, very, very important thing to have for any accounts you have, especially your bank accounts, your trading accounts, because you never know. Things could obviously go wrong, and you never want to be on the other end of things going wrong, because if that goes wrong, it gets ugly. Remember, I want to remind you again, with Tradeovate, it's not only just the S&P futures. You have the NASDAQ, you have the Dow Jones, that light, sweet crude oil. I love that they call it sweet crude oil. You've got gold for the gold bugs, the Russell 2000, the Euros, the Henry Hub natural gas for the nat gas, folks. Nat gas is a wild one, so be careful. Silver, copper, and of course for our crypto heads, Bitcoin. So you got a plethora of options to kind of get in here. And the cool thing is, let me explain to you how these event contracts work. So you click the strike list. So how event contracts work is these are 0 DTEs. They expire at the end of the day, but they don't. But there's certain conditions. You're essentially saying yes or no. Are we going to be closing above a certain point on whichever one you choose? So in our case, yes. In our case, essentially the S&P futures. Are we going to close above a certain point? You'll be buying a contract, or we're not going to close above a certain point. So if you're saying yes, you're going to be clicking yes. You'll be buying this for $9.50. If you're saying no, we're not going to be closing over $45.30. You're clicking no, and you're buying this for $11 a contract. The cool thing here is this is actually raw numbers. You're not paying $950 like a normal options contract. This is $9.50. So it's a very, very good tool for folks who are looking to start to learn how to trade these entities here, and without having to put too much risk. It's something that I really, really love about this, and it's a fantastic tool for beginner traders. And it's kind of also a fun tool if you want to do some lottos. You got days where it's like CPI, you got days where it's FOMC, where you don't want to put too much money on the line, you still want to get some skin in the game. It's a fantastic tool for that. So what you do is you take a look at your chart. You come back here, you say, yes, we're going to close above a certain amount. You can buy a certain number of contracts, or no, we're not going to buy a certain amount. And then at the end of the day, if you're correct, your contracts max out at $20 a contract. That's your maximum winning. Your maximum losing is obviously whatever you put in. You can also scale out just like regular contracts. You don't have to hold till the end of the day. And you can also cut losers. If you're losing on it, let's say you bought a position, you bought too many contracts, you're like, hey, this isn't going my way, you can cut the position right there and kind of call it a day across the board. So let's go to ES. Let's go to our S&P futures and take a look. It has been a scorcher, a ripper, a massive, massive mover. This thing's been beautiful. I've been loving it. I love at night, like markets are closed. I'm not really looking at crypto too much. I always like to watch ES. People like to check the sports, kind of the sports, how sports are going, the scores. I'm not too much into sports these days. I'll watch soccer from time to time, or football as it's properly said. Don't sue me, bro. But we can see we had a nice breakout here. It was a parallel situation for anyone who's watching this. We had a parallel situation to the wedge breakout. Again, it's happening one more time. Not as violent to the upside because, of course, we don't have the CPI catalyst, but she broke out essentially around 3 in the morning, broke out, and you can see here you're kind of, and it's even breaking out of this trend line here as well. It broke out. It's having some trouble, but it's there, and we're essentially over 45.2576. Which is our 61.8% fib level. And I'll zoom out actually really quickly to show you what the range on those fibs are. So I went a little bit back in time to put that range of fibs in. It is from the 29th of March to the 18th of April is that range that I'm putting it. It covers a buffer zone of where I want to be. I like to have a good, nice range on my fib levels when I'm doing them. And then what I do is I'll come back and I'll fill in the gaps, as you can see with the 1,000,001 lines there. The lines are what makes us money, folks. Our money lines are, that's a fun way. You know, I'm going to call them money lines from now on. That just came to my head right now. These money lines. And you can see here, take a look at this. It's not magic, folks. It's levels. We've been having trouble getting over this 45.3250 level here. It's testing it twice now on the hourly, and it's been rejecting it a little bit here. But VWAP and the 9 EMA have been our best friend, and our bestest friend has been this 20 EMA down here at 45.18. So it's kind of what I'm watching very closely here. Let's actually put in a trend line together here. Of where things are going. I'm going to we have a bit of a rising wedge that I kind of want to manipulate here and kind of draw it out. So I'm going to adjust some of our lines here. So take a look at this. Let's adjust this bottom end as well. Tighten it up a little bit there. You've got a bit of a rising wedge, which is a bearish pattern. And you do have we're very, very extended, a lot of situations happening. So you could have some profit taking going on into the day. So personally, Taking a look at some of our event contracts. So where are we right now? 45.27. So 45.27. So we're between these two guys right here. So we're saying, are we going to close over 45.27? Or are we going to close over 45.30? So we're watching this close. So you can see here that we're having trouble getting over 45.32.50. So I'm inclined to go with the no contracts here, saying that we're not going to close over 45.30. Markets already ran hot for several days right now. For several days this week, we've run hot. But again, we've seen these markets. Things could you can have some midday consolidation. It can give it out and then kind of run back up. So you want to always kind of keep that in mind. But we've been running very, very hot. I'm just checking SPY in the background really quickly to see how that's doing. RSI is still not overbought yet. It's very close to that 69.35, right on that 70 margin line. But if we can get over this level here, we have the next leg to 45.39. So personally, just because of this rising wedge, because of this resistance trend line that it's been rejecting, I'm inclined to say we do not close over 45.30 today, just because of what's going on. So I'm inclined to purchase these no contracts here for no over 45.30. But me being the TA guy that I am, I wouldn't shy away. So what I would do is essentially I'd buy 5 of these just for fun, throw $50 at the situation, buy a couple of no's on this one, and buy also a couple no's on this 45.20, just in case this rising wedge plays out, which is essentially it's what is the move here from the low of 97 to the high of 15. So it's a big move here. So you'd have essentially, if the rising wedge plays out, you'd probably come to 45.17. So the 45.20s would also, the nose would work. So what I would do is I'd probably buy 5 of these and then another 5 of these as well here on the no end. Not really hedging for the upside personally, because I'm not really too crazy about the upside here. But what I'd be going with is no's on these 2 contracts, or what I'd be really watching. Again, why? The reasoning one more time. Rising wedge. Support lines holding. So my 30s would cover me if this trend support line here holds, the 90 EMA holds, VWAP holds. That would cover me on that end. These would expire worthless, but these would jump up and give me 100% gainer here from 10 to $20. But if the rising wedge plays out even beautifully, it'd be a nice winner there. So across both of these, I would have my 5 and my 5. All 10 of the contracts here that I'd buy would go to $20 if we kind of close underneath it, and we'd have a nice little story there, and things would be going well. So we're watching this rising wedge. I would be going with these 2 contracts here. Again, mainly this would be my main trade, would be this one. This would be my hedge lotto YOLO bet for fun. I know it's Thursday, it's not Friday, but I'd still go with that one there, just because I'm inclined to say that the markets are a bit overextended. I know the FOMO can kick in and it can go higher. That's the beauty of this, is our risk is minimized because the contracts are so affordable. But this rising wedge is telling me, hey, we had our party. We had 2 days. We had 3 days, several days of partying happening here. A cool down is welcomed. Now the question is, how far of a cool down do we get, and how low does the cool down go before the day ends here? So folks, as always, thank you so much for watching. Make sure to sign up for TradeAvate, our partner here. Go to placeyourtrades.com to see a bunch of data and a bunch of information that's there to access the trading dashboard. Get a load of some of the awesome tools that we have there. Sign up for that newsletter. Sign up to trade with us. And there's a ton of exciting stuff coming to the website. I'm your host, Ryan Rozbiani. You can find me on Twitter at Ryan Rozbiani. All the information is there. Happy to interact with you there. I'll be back next Thursday at 11 a.m. Eastern Standard Time to update you on more. Thank you so much for watching. See you next time. Bye-bye.